PayPal released their latest quarterly figures before the market opened, and when that happened, the stock was actually down 3 to 4%. At the time of making this video, we're actually up 1 to 1.5%. So let's go over the earnings report and a couple of comments that were made in the earnings call. I already covered SoFi. If you missed that video, that will be in the top right corner. Now, for PayPal, it's important to note that we are not in growth mode. We are in profitable growth mode. Now, profitable growth mode means that the business is still growing year over year, might not be growing by much, but profitability wise, transaction margin dollars, EPS, margins as a whole is improving each and every quarter. And that's the most important part as of right now. So let's dive right into this. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. A special thanks to FinChat as well for sponsoring this video. You can now get not 15% off, but 25% off. That offer will last up until Thursday. So make sure you check out that link down in the description and in the pinned comment. More on them in just a bit. So PayPal. PayPal is a stock, or PayPal should I say, because yeah, really, if you look at the last 12 months, this is a stock that in the last 12 months basically did, well, absolutely nothing. It's still down 1.7%. Craziest thing here is that year to date, we're still down around 23%. I mean, it was undervalued before. It is extremely undervalued right now. We're back in the 60s. We were, of course, closer to $100 a couple of months ago. But this is a company where margins are improving, free cash flows are in the billions. They're buying back stocks quite a lot each and every quarter. PE wise, it is very low. Of course, it should not be that high because this is not a high growth company. So I understand that, but still there is quite a lot of value here. But then again, the turnaround story in this case is also, well, taking a little bit more time. All right, let's start with slide number 1 here, advancing strategic growth drivers. So of course, we've seen that already last quarter, but we do have now updated numbers. So first up, win at checkout, scaling highest converting checkout experiences. So now over 45% of US branded checkout traffic is on the new experience. 3 months ago, that was 25%. So quite some growth there. They're also going to expand to Europe, more specifically the UK and Germany. They also said that they've seen over 50% pay with Venmo TPV growth in Q1. Then as for scale, omnichannel and grow with Venmo, building momentum beyond e-commerce. So they've added around 2 million first-time PayPal and Venmo debit card users in Q1. Around 40% of Venmo debit card monthly active accounts growth in Q1 as well. And buy now, pay later TPV grew by more than 20%. As for PSP, selling their strong suite of value-added services. So this is again where the strategy come in, right? Pricing to value, which is why we're not seeing revenue growing as fast as previously expected, but the margin profile, the profitability profile is becoming better and better. Now, remember, the plan is for that to happen in 2025, so we could see revenue reaccelerate in 2026. So they've meaningfully increased transaction margin dollar growth contribution from PSP in Q1. They've launched optimized debit routing with Wayfair and Upwork, and fraud protection advanced with Regal Cinemas. And then as for the last part right here, scale next gen growth vectors. So here we're talking about crypto, we're talking about PayUSD, and I'll talk a little bit more about the ads business further down the line. All right, so for the quarter, what did we have? We've had total revenue of $7.79 billion. Of course, most of it is coming from transaction revenue. And now the rest here, the blue part right here, that's the other value-added services, which has to do with everything but, well, the payment services. And that has actually been increasing quite nicely each and every quarter. Of course, very, very small part of the business, but it's always nice to see that reaccelerate. Now, if you want to see more of these types of things or track company-specific metrics, well, we can do that here on FinChat, the stock research platform that does track company-specific metrics. So if we go here to segment and KPIs, when you look at the financials for PayPal or any other company, you can scroll down and look at the key performance indicators. For example, active accounts, you can see how many there are, how much that has grown year over year. And that would create a very, very good looking chart for us. Of course, we can see that it has increased 2.1% year over year to a record 436 million for the quarter. The previous record was back here, December 2022, at 435 million. And here as well, you can see that growth started to reaccelerate in 2023 or towards the end of 2023. Now, of course, we can look at various other things, where they generate their revenue from, etc., number of payment transactions. All of that can be found here on FinChat. Not only that, you can, of course, look at the transcript for this earnings call or for all the other earnings calls, analyst conferences, etc. You can listen to it, and you can, of course, generate an AI summary by just one click of a button. And you get that right here. You can also ask it specific questions about the transcript. It is on a credit-based model. So of course, the more you will use it per day or per month, well, you will run out of credit toward the end of your month, but it is very, very useful. So as always, if you want, there is a link down in the description and in the pinned comment. You'll get 25% off for this week only. The promotion is running up until Thursday, and then we're back to 15% off. New members will get 2 weeks of FinChat Pro for free. Continuing here and looking at TPV growth. So total TPV increased by 4% year over year. We've seen a 2% increase in PSP or payment service providers, 8% increase in P2P, and 4% in branded, or 6% if you exclude Leap Day. Now, if we look at branded experiences, online and offline, that actually increased 7% year over year, and Venmo increased 10%. So quite a good performance when you look at TPV. Looking at account and activity metrics, we've seen the active accounts, which we can see again right here, powered by FinChat. We can look at monthly active accounts that has increased 2% year over year. Number of payment transactions, that's down 7% year over year. They're saying here reflecting price to value actions driving lower Braintree transactions, which again was to be expected. Now you might say, okay, so far, I mean, this quarter looks okay, maybe weaker than expected, but to be honest, no, it's not weaker than expected. It's just that, well, we were expecting a weak quarter. We were expecting 2025 to be the year of profitable growth, but very, very low growth. Then looking at transaction margin dollars, 5th consecutive quarter where we've seen year-over-year growth. So that has increased by 7% year-over-year. Transaction margin at 47.7%. That has increased 274 basis points year-over-year. Very, very good to see. And so all in all, what did we get? Revenue increase of just 1%, but non-GAAP operating income did increase 16%. Non-GAAP operating margin of 20.7%. That's up 257 basis points year over year. And non-GAAP EPS of $1.33. That has increased 23% year over year. They also returned $1.5 billion via share repurchases, $6 billion on a trailing 12-month basis, reducing weighted average shares by 7%. So, I mean, if they can continue to do that, I believe by early 2030s, this company will just be private. Moving on to the take rate. So total take rate did decrease to 1.87%. Transaction take rate did come down as well to 1.68%. They say here that transaction take rate is down 6 basis points, driven by payouts and merchant mix within Braintree and branded checkout. International TPV did increase 5% on an FX neutral basis, driven by continued growth in Europe, and cross-border TPV increased by 6%, also on FX neutral basis, driven predominantly by intra-European corridors. And so looking at free cash flow for the quarter, that was just under $1 billion. They say here that free cash flow includes negative impacts from the timing between originating European buy now pay later receivables as held for sale and the subsequent sale of these receivables, changes in working capital, and shifting a portion of annual incentive plan from stock to cash, which is why we're seeing here, of course, a 45% decrease year over year. As for guidance for next quarter for the full year, not much has changed, which has been seen as a positive by the market, especially with everything that's going on right now. So for the second quarter, they expect transaction margin dollars to increase 4 to 5% year over year. Non-GAAP EPS to increase 9% at the midpoint, and GAAP EPS to be between $1.24 and $1.25. As for the full year of fiscal year 2025, transaction margin dollars, same thing here, 4 to 5% year-over-year growth. Non-GAAP EPS growing 8% at the midpoint, free cash flow between $6 to $7 billion, and repurchases of shares around $6 billion. So again, nothing much has changed, and that has been viewed as something positive by the market, because they also said that, look, given the uncertainties right now, even though we had a strong start of the year, even though Q2 looks okay, we want to give ourselves some flexibility for the second half of the year in case there are some drastic changes, aka a decline in consumer spending, e-commerce activity, and all of that. And so a couple of things that were mentioned during the earnings call. PayPal debit card TPV growth exceeded 100% in Q1. Users who adopted the PayPal debit card transacted nearly 6 times more and generated more than 2 times the average revenue per account compared to those who used online branded checkout only. As for the PSP business remains a key driver of transaction margin dollar growth with a focus on value-added services. That's the blue bars that we've seen at the start of the video. Talking about the macroeconomic considerations, the company is monitoring consumer and SMB health closely, as well as the potential impact of tariffs and geopolitical events. PayPal recently expanded its ad business internationally with a launch in the UK and is launching off-site ads, which are ads informed by PayPal's insight but placed outside of the PayPal platform. It still is very, very small. I wouldn't really expect that much from PayPal ads in 2025. It's probably something that will affect the top line and bottom line for the company, probably starting in 2026. An analyst at JP Morgan asked about macroeconomic impacts on consumer and SMB health. The CEO noted consistent consumer behavior and opportunities in the Buy Now, Pay Later and rewards program. The CFO added that charge-off rates and delinquencies showed stability or improvement. Dan Dolev from Mizuho asked the following. He inquired about branded experience, TPV traction. Alex Chriss emphasized the success of both PayPal debit card adoption and its impact on consumer habituation. As for an analyst at Barclays, they asked about the impacts of tariffs on the business. The CFO said, specifically when it comes to the China side, CFO said that Chinese merchants selling into the US represent less than 2% of branded checkout TPV. And then the last one here, Bank of America, they were looking for insights into branded volume growth. Alex Chriss highlighted improvements in branded checkout experiences and plans for European expansion. And so to conclude this quarter for PayPal, yes, it can be painful holding this stock, especially if you look at other fintech stocks that are moving faster than PayPal. Yes, it's true. Some others are in their growth phase. PayPal, not so much. They're more focused right now on, to be honest, changing the business, changing the way people interact with the whole PayPal ecosystem, but they're doing so in a very profitable way. So yes, I would say the growth story is taking maybe a bit longer than what I previously expected, but definitely not longer than what we were told a quarter or two ago. I think things are still on track. Yes, the stock's reaction, the stock's movement sucks for sure. I didn't think we would be back in the 60s, but then again, I don't control the market. Alex Chriss doesn't control the stock as well. They can just buy back more and more shares in the meantime, but I do still think that this will be a triple-digit stock. When? That's a very good question. I remain pretty bullish on the company until I get proven wrong by management. But if I look at the data, things are moving in the right direction. So all in all, that's about it. Do share your thoughts down in the comment section below, and do check out FinChat for 25% off. Link is down in the description and in the pinned comment. And I'll see you all in the next one. Bye bye.